Welcome back to Investing Talk Podcast. And we wish you Happy New Year and a good 2026 ahead.
Today we're looking at AST SpaceMobile.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Yeah, let's do it. Because AST SpaceMobile is a fascinating one. It's a company that's really at this critical inflection point.
That's the perfect way to put it. They're moving from this sort of pre-revenue, almost theoretical stage into full-on deployment.
And the thing that kicked it all off, the real catalyst, was that launch on December 24th, 2025.
Bluebird 6.
Exactly. This wasn't just another satellite launch. This felt different. It felt like the engineering test they had to pass.
It absolutely was. You're right. This launch fundamentally de-risks their whole engineering challenge.
Yeah.
I mean, we are talking about the largest commercial communications array ever put into low Earth orbit.
The numbers are just staggering, nearly 2,400 square feet. For anyone listening, try to picture that. It's like half a professional tennis court unfolding in space.
Right, and focus on your phone. And that scale, that size, is everything. It's what dictates the actual capability.
So the older satellites were just for testing?
Pretty much. They were proof of concept, good for basic tests, but you couldn't run a commercial service on them. Bluebird 6. This changes the entire game.
Because it's 10 times the capacity.
10 times the capacity of all their previous 6 satellites put together.
Yeah.
This is the moment the tech went from, a science project to a viable commercial product.
And that power translates directly to speed. We're hearing numbers like 120 megabits per second.
Peak data rates, yeah.
Yeah.
Enough to stream HD video, no problem.
But here's the kicker, and you have to really get this part. It does that directly to a normal, off-the-shelf smartphone.
That is the moat. That is their entire unique selling proposition.
Right. No special dish, no clunky ground terminal.
You don't need to buy anything new. Your phone just works. They are completely bypassing that need for specialized hardware.
Okay, let's unpack this. Because if Bluebird 6 proves the tech is real, the next logical question is, can they scale it? And this is where the story starts to sound, well, almost impossible.
It is an incredibly aggressive plan.
The guidance for 2026 is, what, 45 to 60 more satellites?
45 to 60. By the end of this year, it's not a ramp, it's a vertical wall they're planning to climb.
So that means they have to launch, on average, a new satellite every month or two for the whole year.
In aerospace, where everything has to be perfect, that kind of cadence for a satellite this complex, it's almost unheard of.
It sounds heroic. Is there any precedent for this?
Not really. Not for something this big and complicated. Usually you launch lots of small, simple satellites. These Bluebirds are, they're intricate machines.
So they have to basically become a high-volume manufacturer overnight.
Exactly. They have to go from R&D to an assembly line in 12 months. It's the ultimate test of their operational ability.
Okay, so how are they planning to do that? Do they have the infrastructure?
Well, they've been preparing. They've built out almost 500,000 square feet of manufacturing and operations facilities around the world.
So the factories are there.
The factories are there, and they have over 1,800 employees. This isn't just a plan on paper. They've invested in the physical capacity to at least attempt this.
And they're protecting all this with a pretty significant IP moat.
Oh, a huge one. Over 800 patents and patents pending. That protects the satellite design, the transmission architecture, basically everything that makes their direct-to-phone approach work.
Which is key, because if this works, everyone is going to try and copy it.
They'll definitely try. But even with all the factories in the world, you can't attempt a plan this big without a ton of cash.
Which brings us to the financing. The $1 billion convertible senior notes offering. That was just as important as the launch itself, wasn't it?
Just as critical. That $1 billion buys them runway. It buys them time.
And these notes aren't due until 2036.
Right. So it pushes the financing headache way out into the future. It lets management just focus on one thing: execution.
And they did some financial housekeeping, too. They didn't just take the money and run.
No, they were smart. They actually bought back $50 million of older notes that were due much sooner, in 2032.
And how did that help?
Well, it de-risks their debt profile, for one, but more immediately, it saves them $13.5 million a year in interest payments.
Wow.
That's just cash burn. That's gone. Vanished.
So the takeaway for someone looking at the financials is what? They're good for now.
They're good through 2026. The company has explicitly said this capital is enough to get those 45 to 60 satellites up without having to go back to the market for more money.
And that removes that immediate fear of dilution that hangs over these kinds of growth
For
companies.
now, yes.
So let's talk about the competition. Because everyone hears satellite internet and they immediately think of Starlink.
Or OneWeb, maybe.
Right. How does AST SpaceMobile even compete with these giants?
Their advantage isn't size, it's approach. We keep coming back to it, but it's that direct-to-device angle.
Because Starlink needs a terminal.
Starlink and OneWeb need a terminal. They serve businesses or people willing to install a dish. AST SpaceMobile. They just want to talk to the phone that's already in your pocket. They integrate with the cell companies.
Which opens up a much, much larger potential market.
Billions of potential users. And they've leveraged that to build another moat, partnerships.
That deals with the mobile network operators.
Over 50 of them, globally. Those agreements are the key to actually making money. The satellites are just the pipes. The MNOs are what turns on the revenue stream.
It's a compelling picture. Tech validation, capital secured, partnerships in place. So you start to look for signs of confidence from inside the company.
And you find it. In December 2025, just before that huge Bluebird 6 launch announcement.
A director, Keith R. Larson.
Yep, he bought 675 shares for over $49,000. It's not a massive sum in the grand scheme of things, but the timing is everything.
It suggests that the people who know the most were feeling pretty good about that launch.
It's a strong signal. And it wasn't just insiders. That $1 billion offering was oversubscribed.
So the big institutions, the big money, they want it in.
They want it in. It's a huge institutional stamp of approval on their plan and their financial stability.
Okay, so here's where it gets really interesting. Because we have laid out a very strong case, but this is still an incredibly risky play. We have to look at the other side of the coin.
Absolutely. And the biggest risk is the elephant in the room.
Execution.
Execution risk.
Yeah.
That plan to launch 45 to 60 satellites this year it's walking a tightrope. One little manufacturing problem, one delay.
And what happens? What's the immediate consequence if they miss that schedule?
The revenue gets pushed out. Instead of seeing real commercial revenue in mid-2026, maybe it slips into 2027.
And the cash burn continues.
The cash burn continues, and they might have to go raise more money sooner than they planned, which brings that whole dilution risk right back to the forefront.
And let's talk about that dilution risk, because those convertible notes have a conversion price, right? Around $96.
$96.30 to be precise. And you should care about that number because if the stock is trading below that when the notes come due, the bondholders can convert them into shares,
Flooding the market with new stock.
which waters down the value for every existing shareholder. So they solved the cash problem for now, but they created this longer-term dilution cloud that hangs over everything.
And the market reacted to that. It was a mixed bag. People liked the cash, but hated the potential dilution.
The classic growth stock trade-off.
So if you're watching this story unfold in 2026, what are the key things to look for, the catalysts over the next, say, 90 days?
First and foremost, the launch cadence. You need to see Bluebird 7, 8, 9, and 10 go up successfully and on time.
Every successful launch proves they can actually do it.
It de-risks the whole manufacturing plan. It's the most important data point right now.
What's next?
Then you need to see the partnerships turn into actual service. Look for announcements from those 50 mobile operators saying they're activating the service for their customers.
The go-to-market has to work.
Right. A satellite in orbit doesn't make you any money if no one is using it.
And finally, the big one, the moment everyone is waiting for.
The first commercial revenue announcement. The estimates put that sometime in the second quarter of this year, once they have about 15 to 20 satellites operating.
And that's the trigger. That's when the story changes from pre-revenue speculation to a real revenue-generating business.
That's the re-rating event for the stock. There's also a dark horse catalyst to watch for.
Oh.
Government contracts. The tech has obvious applications for defense and intelligence. If they land a big, high-margin government contract, that could be a huge unpriced boost.
If we connect this to the bigger picture, this company has validated its core technology with Bluebird 6 and has secured the capital needed for the massive 2026 deployment plan. But the transition from technical validation to manufacturing execution is the ultimate test of their model.
I couldn't agree more. The challenge is no longer about engineering. It's now a manufacturing and a logistics problem.
And the next 90 days are everything. The success of those next few launches will tell us if that revenue is really coming in mid-2026 or not.
It's the whole ballgame right now.
So the thing to really think about here is that in the space industry, proving your tech works is really just the price of admission. The real challenge is scaling it. AST SpaceMobile has the tech, they have the money. The only question left is, Can they build them fast enough? If you want to follow along as we track their progress, make sure you're subscribed. We'll see you next time.